The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Masters and treasure hunters, welcome to the December 15th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a fabulous start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary Monday. And let's always remember, what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled is real, folks. And I want to thank you for scheduling your time with us here. I am grateful for your presence. I'm here to serve you. And I'd love to do that. Just give me a call at 877-927-6648 internationally. You can reach out at 727-445-1044. Remember, if you've got a question, someone else has got that exact same question. So let's not call in for yourself. Let's not call in for me. Do it for someone else. A random act of kindness. That's the way to start your day each and every day out there. This is Magical Monday, of course. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 65 points. She's trading out at 17,345. S&P up 10 at 2,012. Composite up 15 at 4668. Russell 2,000 up 3 at 1155 out there. Just as we were going into the final segment of the last show, we had Mark from Massachusetts give us a call, and he was really interested in trying to understand, hey, what's going on the longer term perspective for the markets out here. So and we only took just a quick peek at specifically he was looking at the composite, but we really didn't get a chance to look at the charts here. So let's do a couple of things here, because and we're going to start from the long term and work our way back. I think that's maybe the best way to do that. So let me switch. I'm going to switch back and forth between charting tools out here. So let me get over to my monthly charts, and let's start here with the composite. So I'm going to pull the composite, the monthly chart, up on my screen here, in essence, since that's what he was talking about. And let's make sure that we get a feel for where we're at here. And there's a number of different things that I'll give you some numbers for us to pay attention to and to focus on. Now, inside of the composite, what we know is that we're trading inside of the March 2000 swing point. The low of that swing point is 43.55.69. Let me get my crosshair going here. We are trading inside that right now. When you trade inside a swing point, it doesn't really matter whether you're with if you're with volume, that really increases the odds that you're going to go test the top or the bottom. If you're trading higher, it says you're going to go test the top. If you're trading lower into a lower swing point with volume, it says you're going to likely go at least test the lower one. If you're doing it on light volume, it still says you can gravitate to the top, until you see the composite break below, close below 43.55.69. You're at 46.60 right now. The assumption has to be that prices on a monthly basis wants to go make its way up to that high at a minimum. The top of that bar, by the way, that price point is at 51.32. Can price get beyond that? Yeah, most certainly can. What do we know about the monthly chart for the composite? Well, number one, it was in a 13-year 1,500-point consolidation. That measured move, what I mean by a measured move is when you take a look at that little square, that consolidation, these are the black horizontal lines going across my screen. Price, when you break a consolidation, is going to make a move typically equal to or greater than. Well, in this case here, it's greater than, because the actual measured move of that consolidation at 1,500 points said we should see a price projection of 4,400. You're at 46.60 out here. All right, so that's one thing that we know. We're trading inside of that swing point. What else do we know? Well, if we take a look at the A to B equals CD pattern, the A to B equals CD pattern that began with our March low out here as our A point, with the high in May of 2011 as your B point, a very shallow retracement down into the 2011 October time frame out there. That's why using that October level is really important for using trends. I remember that October 2011. Really important for us to use that as our trend line out here. That is the C point of an A to B equals CD to the upside. What do we know? We're above the 1-to-1. We're above the 1 to 1.272. We're on our way to the 1 to 1.618. A to B equals CD. That's at a price projection of 49.23. That is where price is likely headed to inside of the composite. Now, what else do we know? Well, if we end the month of December badly, and we could, it's always possible that Santa, and it wouldn't be Santa, it would have to be the Grinch that would have stole Christmas out here. So if the Grinch has somehow hijacked Santa and is going to deliver coal, well, what we would see here is you would see a close below the open of October. The open of November. That open, by the way, is 46.33. Why would that be important for us to watch? Because you'd have price moving higher with less relative strength out there. You would have a bearish reversal signal, and that would be important for us to pay attention to. We are not there yet, but it is something to keep our eye on. At this stage, the preponderance of evidence says that the NASDAQ composite wants to move higher. Remember, I said use that October area. Let's focus on that October level out here. That was the monthly chart. I'm going to switch back here. We're going to go take a look at a weekly chart here for the composite. Now, if we take a look at the October 2011 low out here inside of the composite, that's 22.98. If we use that as our touch point, then our next touch point for our trend line is November of 2012. When price was pulling back in October, didn't get anywhere near that level. So the trend, all that we have seen so far in any of these moves to the downside has been nothing more than a retracement in an uptrending market. Do we have anything else in place today that says anything different? No, not really. Can we have retracements? Absolutely. If we want to go take a look at some other trend lines, we can. But I think the most important trend line is the one that comes off that October 2011 area. Okay, inside of the composite, what are we doing? Inside of the composite, you're trading below its horizontal trading range boundary line. That says 47.14. That's a key level on a weekly basis. Now, I'm just going to go ahead and I'm going to open up my chart here. Well, the chart's open. I'm going to go ahead and open up the tool that identifies these horizontal trading ranges. I'm going to go ahead and put the monthly numbers up on my screen here. Those are the red lines coming across my screen. Now, the difference between my work here, which is horizontal trading ranges, versus Bud's work, Bud Rolf's work, which is primary trading ranges, is that I get the benefit of being able to have the system automatically go calculate these lines out here. And it calculates these lines by taking a look at the largest number of opens and closes that occur within, a few dollars of each other to try to identify the area of the largest amount of ice, the largest amount of support and resistance out here. Once I've got my first two set, then the others just simply replicate an increase in price. A monthly line, because of an open and close, is going to be different than a weekly line. It's going to be different than a daily line. That's why I like to be able to have this chart, and I like to be able to say, okay, I'm looking at the weekly chart out here, but what's going on a move higher and a move lower? Well, here's the thing about the composite as you look at the weekly chart. How is it that price stopped at that 46.53 area? To be specific, inside of the composite, the low last week, 46.53.60. The actual monthly horizontal trading range line, 46.53.37. I mean, how in God's name does that work out there? Now, does that mean that price has got to stop here? Absolutely not. I got a crystal ball like you've got a crystal ball. My crystal ball happens to be just take a look at the chart data. And what does the chart data say? Chart data says that price moved down into a monthly level of support unless that level cracks, which it could. If it cracks, remember this is a monthly line that we're looking at out here, so you can have extreme emotions, those levels of those wicks on the candle, those upper and lower shadows out here. But right now, what we know about the composite on a weekly and even on the monthly chart out here, we know that price is up against a pretty good level of support. What else do we know about the composite? Now, if we switch over and take a look at a daily chart for the composite, that's what we're going to do because we're trying to put together all these different time frames to understand what's going on. Number one, what do we know about the composite? Well, if you take a look at coming off of the October low out here, the October low with a price point here of 41.16 to the high that was put in out here. Oh, man, my cursor's all messed up. I don't know why. 48.1086 is the number. What we can see is that the composite has not even close to a 0.382 retracement. After that strong move up, look, retracement levels, your Fibonacci summation sequence numbers, 0.618 is normal. That would say the composite wouldn't even have any damage really. It would be some price damage for sure. But a normal move would take it down to 43.81. Are we going to get down there? I don't know. I don't think so, but we can. We got to first get to the 0.382 retracement level of 45, 45, 65. There's nothing really that bearish. There are some lagging indicators. I've got the 8-day crossing down below the 13-day. That's never a good thing from a bullish move, that's for sure. So I can always find things that are wrong with a move out here. But the reality is, we take a look at price moves inside of the composite. All that we've really done, or all that it's really done, is get back into the, not even really the top of the October 31st. That was a breakout. That was a wide price spread, accelerated volume type breakout. It hasn't even come back to test the level of support, which is 45.75 out there. And that's what we need to do. That would also be down around the 45.382 retracement level out there. Look, at this stage, sellers have control of the composite on its daily chart. Absolutely, end of story. Not even a question in my mind, probably not even a question in your mind, even with the composite being up slightly as we speak today. But if this price oscillator, this blue line on my chart, gets above the zero line, if it gets above the zero line, I will tell you that the bulls will have taken charge of the market. And that's really one of the things that we're looking for. Can that price oscillator get above that level out there? So that is taking a look at the composite. That's looking at monthly, that's looking at weekly, that's looking at daily. And I hope, Mark, that maybe better helps to identify what it is, at least, that I am looking at. Now, we don't have to stop there. Let's go take a look at the S&P 500. Let's see if we can do this here within this little 2-minute segment. What do we know about the S&P 500? She's got a 16-year, 800-point consolidation that says that its measured move should take price up to the 2350, 2450 level. We aren't there yet. If we take a look at our A to B equals CD, to the upside, a 40% retracement was that C to D, was that B to C leg. You're above the 1 to 1.272 at 1969. What does that say? That says price wants to move to 2213 as its next move out here. That is on the monthly chart. Those are the price projections. Until we see some other kind of monthly bearish reversal signal and we see some kind of follow through the following month, which in this case here could be December and then January, then we'll go ahead and take a look at what the monthly chart says there. Otherwise, let's go down and let's go take a look. And remember that October 2011 area is important. Let's go back and take a look at our weekly chart here for the S&P 500. So we'll put that up on our screen. The swing point was the same, that October level out here. If we take a look at coming off of the October 2011 low, and then we go ahead and as our touch points, we use the November 2012 low. What we're going to see is price had moved down for us inside of October 16th, moved right down into the trend line. The trend line is still intact. If we take a look at where price had moved here, now this is where the S&P is a tad weaker than the composite. If I come over, I'm going to turn off my monthly horizontal trading range numbers out here. The real key level for the S&P 500, in my opinion, is 2028. Or just above that. If we see a close above that, the move to the downside very likely could be over. If not, hey, price can take us all the way back down to that trend line. That gets us down, Mark. That would get us down into that October area, maybe the high of that October 1912 level, 1912, 1936-ish or so. That's the S&P 500. We come back, we'll go take a look at we'll take a look at the daily chart. But you can give us a call. We can look at something else. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off about 4 points, giving back its gains from the early morning. S&P is still up 2. Composite is flat. Russell is flat as well. Let's go out to Philadelphia, to the city of brotherly love, to a brother that we love so much. That's John from Philly. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve Rhodes, I'm doing very well. Thank you.
Good.
Steve, I wanted to ask for your eyes on GDX. Now, gold and miners have been tricky for me since early November with their fits and starts, and neither of those markets, gold nor the miners, has proven anything yet. But I smell a bottom, a secondary bottom, a higher low in GDX here, the gold miners index. What do you see?
I think I see kind of the same trouble that, well, so let's look at it a couple different ways. Let's look at a couple of things. First, if we take a look at, because of the correlation that the GDX has to gold, and we take a look at the gold chart, what we know is that gold broke through a trend line with some conviction back on December the 9th. And so when it broke through that area, it broke through 2 trend lines. Typically when a market breaks a trend, both either whether it's bullish or bearish, in this case here, the bullish case would be, if you're long, maybe you don't want to see it come back and test the trend line, but the reality is you really do. Because if it can test that trend line, reject it, and then move higher, it tells you that the trend has changed. And so in this case here, there's really two trend lines that I'm taking a look at inside of gold. One from the high from July 10th. The other is from the swing point from August 14th. The August 14th one is the one that was tested so far this morning. So if gold can hold these levels, or maybe even if it moves down intra-session and tests the TAS resistance level of the 1198 and rejects that area and stays above it, I would say that bodes pretty well for gold. If gold closes below 1198, I'll be scratching my head. Now, when I scratch my head, I won't scratch it too hard because I only looked at the COT numbers just briefly. I didn't get a chance to update my charts, but it looked to me like the commercials had taken their pedal off of the metal even further on their less net short positions, meaning they were getting more net short, so to speak, which is normal when price moves up. But I didn't totally evaluate that. But so the first thing I would say is that if gold holds these levels here, that should bode well for the GDX. The troubling thing that I see is that when I take a look at that actual correlation between the GDX and gold, now I happen to have the nugget on my screen here for the moment, but that's in essence the same. Although I can try to put the GDX up. But what I see is I certainly see those rising bottoms inside of gold. I mean, it's very clear. That's the center portion of my screen. We have slightly rising bottoms inside of the GDX, but not as much of what we've seen with gold. So this chart here, I question, why is that? Of course, the reason why is because the GDX or the nugget, it's a weighted indice. And so you've got Gold Corp, which is the number one weighting. And so, there are some mining stocks that are behaving better perhaps than Gold Corp. If we take a look at Gold Corp, GG is the ticker symbol. What Gold Corp hasn't done is not been able to break above that little supply line, that little resistance from October 30th. So specifically with regard to the GDX, because it's got Barrick Gold, it's got Gold Corp. It's probably, John, is there maybe would you say there's 10 stocks that make up 50% of the GDX? You might even know those numbers off the top of your head.
The top 7 make up 50%.
Yeah. So we really have to understand, in essence, what's going on there. But the number one weighted even today is traded just a tad lower. It's traded below its TAS market profile. If I take a look at Fibonacci numbers, what has it actually done? It's really right at the 0.618 retracement level. So this could be a bottom for Gold Corp. If one were long the miners, specifically the GDX, you'd certainly like to see Gold Corp hold this level. I think Barrick is one of those as well that's inside it. ABX, that's already trading back into that November 5th swing point. So,
Steve, one thing I'll share with you. Several weeks ago, I was listening intently to Tom O'Brien's show, between 3 and 5.
Yes.
And he was going over the major institutional holders of a number of the mining names. And one that stuck out of my mind is,
hey, would you be good enough to hold on through the break? That was a critical pause, by the way. You are a natural when it comes to being a radio host. I mean, just a natural. You got people on the edge of their chairs, and they've got to wait about 4 minutes.
I will.
All right, we'll be back. We'll be back with John from Philly in just a few minutes, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 3, S&P up a couple of points, composite off 1. We're going back out to Philadelphia to our man John, who was making a point of the institutional holdings within. So he's got all of us with bated breath out here. She was going to share with us the secret that each of us need to know. So take her away, Johnny.
Yeah, Stevie, it's not my secret. It's Tom O'Brien's secret. But just to repeat it, in one of his nightly shows in the past couple of weeks, he went through a review of institutional holders of a couple of names.
Yes.
And one that was kind of representative, kind of stuck out of my mind, and that was Humana, AUY. And what had been seen was that like 10 big holders had, since like September 30th, had dumped huge amounts. In other words, 10 holders were long big and ridden it down and taken their lumps. And something like 5 or 10 new institutional holders were equally as large buyers. And so what you had in that particular case was just a situation where one group of holders bailed and were replaced by another. And I've during massive bear markets in just about anything, that type of behavior is very common. So I merely share that observation of Tom O'Brien's on a couple of these names. Now, thinking about gold and the miners this week, I'm reminded of the fact that the FOMC meeting is Wednesday. I'm further reminded that Vice Chairman Fisher is more hawkish than many, and for whatever reason, he's been on the financial press circuit a bunch, like in the past 4 weeks. And if something like a surprise rate hike or something like language that might imply rate hikes sooner than later, if something like that were to come, I could certainly envision, gold and miner selling coming up. But with that caveat put out front and set on the side,
yes,
telling me to manage risk, I'm just thinking low November 7th rally, now pull back, and here we are mid-December, and it just makes perfect sense to me, if we have a bottom in place, that the drift lower the past 2 weeks makes perfect sense, in that there might be some residual players who are looking at their portfolios right now, looking at the end of the year, having good capital gains and a great many equities, and saying, gosh, we can offset that with some capital losses, reduce our tax bills, and so on the margin you have some net selling. Selling pressure in, mining names just to take losses. And I'm just wondering or thinking, if it bottoms in, this kind of weakness fits exactly with that tax loss selling idea. And once that's out of the way, if that's what we've got here, that you could have essentially selling vacuums and, markets and these shares move up 10, 20, 30% fast.
Yes, when you talk about the tax selling, and when I take a look at the historical seasonal patterns inside the S&P 500, and those seasonal patterns basically say a secondary bottom is formed inside of the S&P 500 that takes us up through the so-called Santa Claus rally. That selling is usually done by December 15th, happens to be today, because that's when people start taking their holidays and so forth. So the tax selling aspect, I'm sure that even added to what we're seeing inside the market last week, maybe even a little bit today. With regard to the XAU, if it has formed a bottom, one of the patterns that I like is when price moves lower and does it with less relative weakness. It's just telling you that the selling is somewhat drying up. Now, I utilize that pattern in a way that's unique. I believe it's unique to me because I combine a couple of different elements here. When the XAU made its bottom, its most recent bottom, you mentioned November 5th specifically out here, and it gave us a nice little bullish reversal signal the very next day, follow through after that. That relative strength or relative weakness reading was down at in the 25, 22 type range. Typically what happens with that pattern, if it's a real bottom that is in place here, is that the relative strength indicator will work its way up into the 70 to 80% level, which it has not done as of yet. And just as an example, if I go back a little bit further, last time we had a bottom that came in back in May of 2014, we saw price move up above the 70 level before it finally, in this case here, it happened to make a peak G and then a bearish reversal signal at that same time on the trading session of July the 10th out here. But if a bottom has formed, this says that it really has more room to run to the upside. Of course, anybody could draw that conclusion. But what I'm really saying is that there is a bottoming pattern that's out here that is typically associated with price now, at least inside that relative strength indicator, moving up into that 70 to 80% level, and we haven't seen that yet. So, at this stage, I would say that I think this is the Not sure what moving average. This is probably the 50-day moving average. 74.28 right now is the kind of the resistance of that 50-day moving average. I think if the XAU can get above that, some of those folks that were sellers that you were talking about that were dumping stocks and we were changing hands, probably what happens is those folks that are sellers start to maybe say, I need to go back and take a look at the mining index out there. Right now, that's held as resistance, and that 50-day is what needs to be crossed in order for, I think, for us to really get that next wave of buying to the upside. Just my thoughts when I look at the chart.
Thanks for sharing that. Yeah, thanks for sharing that parameter. I appreciate that.
Yeah. So that's my thoughts at this stage. As I say, the last thing, I didn't get a chance to do it over the weekend. Just had too many other things going on. But I did look at the numbers at least just to see, what are the commercials doing have they done over the last couple of weeks where they had previously been at all time, not all time, but pretty close to at positions where they were saying, hey, gold is moving up. They've taken their foot off that pedal. Now that's normal, when price starts moving in their direction. But it looked to me, numbers-wise, that maybe it was moving up faster than it should have. I was scratching my head as I was taking a look at that. So, we'll just trade the patterns out here. Does that help at all?
Thanks a bunch.
Okay, you bet. And thanks so much for calling. That was John in Philly. That was taking a look at a thorough look of the GDX out there. As he pointed out, look, there are 7 holdings that make up the top 50 or make up 50% or more of the weighting inside there. And whatever it is that you trade, whatever ETF it is that you trade, just always remember, what's going on in the underlying instrument is so important. So that means that, if you want to trade a ETF or a currency pair, you got to make sure that your decisions are really based upon what's going on inside that currency pair. If you want to trade the ETF like the GDX, the NUGT, you want to make sure that you understand what is going on inside the weighting structure in there. It works the same way inside the energy sector, the XLE. Just an example. Let's take a look at ExxonMobil. XOM is up. ExxonMobil is up 87 cents as we speak right now. It's between ExxonMobil, Chevron, and Schlumberger. You've got like 50% of the DUG, the DIG, the XLE out there. Maybe there's one or more, maybe 2 more stocks or so. And so if you were trading any of those ETFs, you'd certainly want to know what's going on with those individual stocks. Well, in the case of ExxonMobil, as an example, ExxonMobil has made its way back to the October 15th low out here. That had 24 million shares, the bottom of which was 93.32. Let's just put a line across the bottom of our chart out there. Now, the volume, as I mentioned, was 24 million shares. When price came down on Friday to test that area, it was with the same type of volume, 24 million shares, 24.5 million shares. The actual number on October the 15th was 24.7 million shares. Price had closed below it. It didn't take out. That's a B point of an A to B equals CD to the downside, or could be. The volume was about the same, a couple 100,000 shares lower, so it's kind of like a coin toss out here. At this stage, if ExxonMobil takes out that level, right now it's trading just above it, then what we would see inside the XLE, at least, is probably another A to B equals CD to the downside. Now, we're looking at ExxonMobil, but in order to trade the XLE, that's really what we need to be looking at, is ExxonMobil as one of those equities out here. What's another one we need to look at? You got to look at Chevron. CVX is the ticker symbol. If we look at Chevron, what we know about Chevron is it's well below its October lows out here. It broke that October low, the October 15th low that had 15 million shares. It broke it on the trading session of December the 8th with 14 million shares. We haven't seen 15 million shares, so it's down below a swing point with light volume. Does that mean that it can't go complete the A to B equals C to the downside? No, of course not. It can do anything that it wants out here. But if we look at a weekly chart, so just curious, what did it do on the weekly chart out here inside Chevron? Well, clearly in a downtrend. The weekly chart for the week that began October 13th, that had 57 million shares, and last week was broken with 62. So do we really care? Does it matter to us that the daily specifically wasn't broken with volume? No, because the weekly was. So this does not bode well for the energy sector, at least with regard to the weighting portion of Chevron, because that could be a very large A to B equals CD to the downside. So now what else is Chevron trading into? It's trading into a swing point from the week that began on November 12th, 2012, 35 million shares. And last week you came into that level. Did you actually get in there? Yeah, you did. No, I'm sorry. Yes, you did. You are most certainly inside there. So 35 million shares, and you were in it last week with 62 million shares. What does that say? It says that at a minimum, it goes and tests the low out there, or it should, and that's at a price level of 100.66. You're at 102.27. Let's look at Schlumberger, SLB. So any of the ETFs, if you're going to trade the XLF, you're going to trade the XLK. Just go over to the Spiders webpage, SPDRS. Just type that in, and it'll give you what the current weighting structure is by day. They really lay it out for you. Now, you have to do a little bit of work, but by doing that work, you're going to get a clearer picture as to what is going on. And with regard to Schlumberger, this is a weekly chart. It's B point, by the way, the week that began October 13th. That had 80 million shares. When price closed below that, came into it with 49. So Schlumberger is not anywhere near as weak as Chevron is whatsoever. Nonetheless, price is still below the B point out here. So where is it that Schlumberger is headed to? Is there anything on the left-hand side of the chart that we can identify? And the answer here is really nothing more than just kind of a horizontal level of support, a level of ice out here where price has pulled back into. Is that going to stop price inside of Schlumberger? I don't know. What we do know about Schlumberger is it also has this nice, when it was making its highs, this is a weekly chart that we're looking at. We'll go down to a daily chart, the weekly chart on that began June 23rd out here. It had some pretty good volume that was left up at those highs. Let me just take a look at the daily chart, see what's going on inside of Schlumberger. You've got your A to B equals C to the downside. Looks like it's headed to the 1 to 2.618 area, which is about $77 even, Steven. You're at about $80.79 as we speak. Right now at the moment. So that's what you want to make sure that you are doing when you're taking a look at any of the ETF structures. In the XLK, if you're going to trade that, you most certainly would want to know what's going on inside of Apple. Apple's up 38 cents as we speak today. What has Apple done with regard to any kind of retracement out here? Not much. When we look at the NDX, we look at the composite out here, what kind of retracement? Not much. It's because of the weighting structure of Apple. Not entirely, but Apple's still the largest weighting inside that NDX 100. It's trading down right at about the 0.382 retracement. If we look at charts here where there's a little bit of divergence that we should be aware of, one of those charts would be taking a look at the Dow and the Dow Jones Utility Index out here. As we take a look at this, and I'm referring to the low now back in October 5th, the bottom of my chart happens to be the Dow Jones Utility Average. Now, it's a directional correlation that exists between the two. And what we can see here is that from the December 5th area, we've seen the Dow move down substantially. Well, it hasn't made the 0.382 retracement. But when we take a look at what's going on inside the bottom portion of the chart here, the Dow Jones Utilities, we haven't seen lower lows out here like we have inside of the Dow. And what's interesting about this correlation is oftentimes it will be a leading indicator as to whether or not the move in the Dow is correct. The case in point, the Dow was making a low back in April of 2014. The utilities was actually making higher highs. Now at this stage here, it's not making, or higher lows, I should say as well. And are we seeing that in the case of the utilities index right now? No, we're not. But nonetheless, the same thing works the opposite direction. When the Dow is moving higher and the utilities are not confirming that, that's where we have seen price resolve itself inside the Dow in the direction of that divergent pattern that has existed inside the utilities index out here. One of our other correlation charts inside the Dow has always been GE. And if I can find it on my screen here, probably need to make a couple of tabs here for these different correlation charts, but GE should be somewhere in there. I'm doing my eyes are just searching. They'll have to search during the break out there. How about that for a strategic break? This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 24, S&P is up 4, composite down a point, Russell off 3 points as we speak right now. Had a request during the break to go take a look at natural gas. If we take a look at the current contract out here, the January contract, if we look at the daily chart now, natural gas popped at the open last night, opened up at a price point of about, what was the open here, $3.93. You're trading at $3.82 as we speak right now. It's not a bearish candle that we're speaking of. It just simply has traded lower. If we take a look at retracements thus far, let me see here. From high to low, it didn't make it up to the 0.382 retracement. Even though it's sold off today, you'd like to see it close above 385 out there. You'd like to see it get above some kind of resistance. In this case here, it would be its TAS market profile resistance level. Otherwise, what you can expect is price to come back, probably test the 376, maybe get back down to the bottom 3.63 out there. That's what's going on inside of natural gas. Speaking of, gas, so to speak, we go take a look at oil, light sweet crude, down 86 cents here this morning. Still not a single bullish reversal signal. If I go take a look at the crude oil contract and I go switch down just even to a 5-minute chart out here, let's see if there was anything that we can see on a 5-minute chart. Looks like another A to B equals CD to the downside pattern. That is underway. The A point out here, this is ultra short-term chart, right? We're just looking at a 5-minute chart. Out here, there's our A point. Here's our B point, our C point out here right there. You're about down to a level where we ought to see a bounce. That was the 1 to 2.618. A to B equals CD. That price projection was $56.57. You actually got down to a low of $56.65. So that is close enough for me. You got a little bullish engulfing candle. That took place at 10:45 to 10:50. You saw a little bit of follow through out there. So what we ought to see here is a little bounce inside of light sweet crude. What you can do is just simply take a look at all the previous bounces, dollar-wise, and use that as a gauge to what type of bounce that you would expect here. If you start to see A to B equals CD patterns that form to the upside, let me see, was this a Gartley pattern by any chance? Let me see here real quickly. Was this a retracement? No Gartley pattern or anything along those lines. So light sweet crude, the daily chart rules. The daily chart has not seen a bullish reversal candle in a long time out here. We certainly do not have that in place as we speak. Okay, so as we summarize here, what is it that we're looking for? Well, I covered this during the first hour. You can always catch the archive of that show on Channel 9. What I showed here, the left-hand side of the chart, the upper portion is the VIX index with only the 50-day exponential moving average. That's the blue line going across my screen. 1512 is the number out there. Price gets below 1512, the markets will either move sideways or higher. They always do that. The bottom of the chart is the S&P 500. However, what you want to be watching is the Bollinger Band. This is a 50-period Bollinger Band with the one standard deviation out here. What I have identified as a pattern that exists inside of the VIX index. When price breaks above that area, then you start putting it on your radar watch, because as soon as price comes back inside that one standard deviation, 50 to 1 Bollinger Band out here, and that price level is at 1958, you're at 2043, but you close below 1958 today, what has happened is that's when the markets have given us a signal of a change out there, meaning that the retracement would be over. We are not there yet. We're not there yet on either of those VIX charts. If we look at the Euro Japanese yen, she certainly hasn't done a whole lot, just trading sideways, but this is not here helping out the bulls and not doing a whole lot to help out the bears. Folks, it is Magnificent Monday. Thanks so much for joining me. Stay tuned for Basil Chapman, and you got Larry Pesavento, Daryl Martin, David White, Tom O'Brien show from 3 to 5. Have a great Monday. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.